Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar now looking for direction as the new week begins. Meanwhile, the US dollar paused after a powerful 2-month rally installed near 101.80 following two consecutive bearish daily candles, now sits around 101.50. The move came despite May's blockbuster non-farm payrolls report, which showed 172,000 jobs were created, following an upward revised of 179 gains in April, while employment held at 4.3%. This week, the June non-farm payrolls report is expected around 114,000 new jobs added. Alongside the early release of this week on Tuesday will be the RBA's June meeting minutes. Two reports very much important in terms of how the market may perform, given the fact that we've got close to the bottom side of the range, seen somewhere of around 68.35 to 50, and looking back, found in March it created a bull run. Are we expecting that? Well, the ADX is overheating when it comes to the bear case, so we could be in for a correction very soon. Keep an eye on these technicals just in case. Turning to the euro, it was a whipsaw price action on Friday as the US dollar hits the brakes after a 6-day rally, and now backing away from its highest level since May 2025. While the May PCE inflation met expectations last week with headline inflation at 4.1% and core PCE at 3.4%, the data reinforced the Federal Reserve's higher for longer stance. However, easing oil prices has softened inflation concerns, prompting markets to slightly trim rate hike expectations. Now, as I mentioned, attention will be to this week's US non-farm payrolls report, the jobs report, and the ADP employment jobless claims. And also, we do have the FOMC minutes for the June 16-17 scheduled on Wednesday, July the 8th next week. Technically, though, the market is regaining momentum, and since rebounding from that key level of 113.40.50, let's see if we can get a break above 114.45.55 and see a correction. If not, then we could be going back down to these lows again, or even lower to 112.65.70. But they're keeping an eye on these candles. They have improved along with the RSI. Well, very interesting pattern when it comes to dollar yen. It still continues to press against that 162 resistance, and still, although growing Bank of Japan intervention risks are keeping traders on the edge, we can still expect to see possibly another one of these candles coming through, and if so, could wipe out all these gains and see a move back towards the lower side of 158. And keep an eye just in case we do see that move. Sterling, well, another whipsaw price action with an inverted hammer, and now looking for direction. I feel there is in favor of the RSI move in here, that we could see an impulse back to 133, and if so, it'd be a very sharp move, so keep an eye on that and reassess from there. When it comes to gold, well, we've got a shoulder, head, shoulder on the slant, and it could be a correction if we see a break further, but up towards that 4,215 area to get the call and a stronger correction back 4,700 to 4,800. If so, nevertheless, a lot of work to do on the upside. Some people may not be favoring this as a head and shoulders, but I'd still like to see that trend break and get some indication of a correction. Finishing up with oil, well, the market is still respecting this bottom side that was back here when oil decided to take a very sharp rally up to $111 a barrel. And from the break, we are still waiting for this pause of a bounce that is from $67. If we see a revisit, back towards 78 and reassess. Well, that's about. Thank you for joining me. And as always, look out for the intraday report. And I hope you enjoyed the great start to the new week.